Hey there, we are live yet again. It is, we'll call it day 3 or 4 of the Crypto Explained series here on Backers. Myself, Justin Fox, founder and CEO of Backers. Thanks again for joining me. So we're talking a little bit about crypto, or the series here is called Crypto Explained. And over the past couple episodes, I've been talking a little bit about different aspects of cryptocurrencies or crypto technology or everything that has to do with crypto. So today we're talking a little bit about securities or how securities fit into crypto. So let's talk, and obviously there's things like security tokens and all of that. We'll get into all of that, but let's dive right in and let's look at the Investopedia definition of what a security is. Obviously, Backers is essentially a security token offering platform, or as we like to call it, a crypto launchpad, or as we also refer to it as, people use the Backers platform to raise capital through an initial Backers offering or IBO. But let's talk a little bit about what an actual security is. So you understand what we're talking about when we talk about securities and why someone would issue their security through the use of crypto technology on the Backers platform. So let's talk about what is a security. Okay, so this is from Investopedia. The term security refers to a fungible. Remember, we talked about NFTs or non-fungible tokens. So a security refers to a fungible, so it's not unique. They can be interchanged. Negotiable financial instrument that holds some type of monetary value. It represents an ownership position in a publicly traded corporation via stock. Okay. It could also be a creditor relationship with a government body or a corporation represented by owning that entity's bond or rights to ownership as represented by an option. So that's kind of very broad. It kind of skirts over a lot of different things, but here key takeaways obviously are the securities are fungible and tradable financial instruments used to raise capital in public and private markets. Okay, so that's what a security is. There are primarily 3 types of securities: equity, which provides ownership or rights to holders. Okay. Debt, essentially loans repaid with periodic payments. Okay, so debt is another type of a security. And third is a hybrid, which combines some form of debt and equity. Okay, public sales of securities typically before now were regulated by securities regulators like the SEC, okay, or the OSC, okay. And they were public sales, okay? So it was typically an IPO or some sort of issuance, whereas now on the Backers platform, a private company can issue shares in their private company to everyday retail investors, to the public, through a regulated sale on the Backers platform. We also have other, won't get into these self-regulatory organizations or SROs, but there's some here in Canada as well. So that, if you want to go to this site, I can probably put this in the comments so you can see sort of where it actually is, where the definitions are here. But basically a security, though, is, let me put this in the comments. That's where what a security is, okay? So now that you understand what a security is, again, we're live here, so let me just... and we are gonna keep talking here. So we're talking a little bit about securities. So now that we know what a security is and how it's sort of defined, so we've got understanding securities. So you've got equity securities. So an equity security, which is typically what somebody is purchasing on the Backers platform, represents ownership interest held by shareholders in an entity, right? Typically it's a company, could be some sort of partnership, a trust, maybe a fund, something along those lines, realized in the form of shares of capital stock, which includes shares in both common and preferred stock. Okay. Holders of equity securities are typically They don't get regular payments, so they're not, employees, although they do have things where they can pay out dividends, but they are able to profit. This is key. Equity owners are able to profit from capital gains when they sell the securities, okay, assuming obviously that they've increased in value. And equity securities do entitle the holder to some control of the company, typically on some sort of pro rata or via voting rights. And in the case of bankruptcy, they share only in residual interest after the obligations have been paid out. So there's a lot of upside on the gains, but there's little downside on the risk of the overall company. So that's what a security is. Obviously, we can talk a little bit about the debt aspect of securities as well. But typically, a security issued through an STO or an IBO on the backer's platform represents ownership or stock in that company. It represents shares in that company. So it's a private company that is now going to issue their stock for sale to the public while still remaining a private company. This is very new. It was actually illegal prior to 2016 for a private company to have more than 50 investors. And all of those investors typically were high net worth, wealthy individuals. Now with the backers platform, a private company, just like the 1 million plus companies across Canada that have at least one employee or employer companies, they can now issue shares in their company to the public, to the community, to their fans, to their clients, to their users. They can now issue shares, sell those shares to raise capital, okay, for their business. Those shares then are held by those investors on their backers' digital wallet in the form of a crypto stock or cryptocurrency or crypto token. Again, we talked a little bit about what a cryptocurrency is and how crypto stocks or security tokens are a form or a version of cryptocurrencies. The majority of cryptocurrencies in the marketplace today, like Ethereum, like a lot of these different cryptocurrencies, are actually more similar to security tokens in the sense that they represent ownership in that crypto project. So that's what we're talking a little bit about today. Crypto Explained. We're talking about securities and what a security is and what it represents. It represents ownership in a business. It can be debt or equity. Equity obviously is the ownership aspect. So now we're going to talk a little bit about how is a security defined. So one of the things that a lot of people, and this is a big issue right now, globally actually in the crypto space, is how is a security defined and what makes it a security versus not a security. And right now, the test that is used that many people are not familiar with is the Howie Test. Now, this, as I said in our previous video, may change with as a result of the XRP SEC trial, where XRP is being delisted. It was just delisted by another Canadian exchange, BitBuy. I believe they'll be delisting it on January 13th. It was announced. Yet another in the long list of crypto exchanges delisting XRP, because if it's deemed a security, you will not be able to trade it on a crypto exchange because they're not regulated securities exchanges. So that's kind of interesting. Backers is building a regulated securities exchange through the use of crypto technology. And that's where the differentiator between the two is. But let's talk a little bit about the Howie Test. So the Howie Test refers to a Supreme Court case where it was basically the SEC. It's the Supreme Court case for determining whether a transaction qualifies as an investment contract and therefore would be considered a security and subject to disclosure and registration requirements under the SEC or Securities Act of 1993 and the Securities Exchange Act of 1934. Under the Howie Test, an investment contract exists if there is an investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others. This here is pretty much, I'm going to put this in the comments, is literally what determines whether something is or isn't a security. So if you're looking at launching or raising capital for your business, you need to know whether something is or isn't a security. And the Howie test is how you figure that out. I'm going to put this in the comments there so you guys can have that right there. But that's how something is determined whether something is or isn't a security. So the test applies to any contract, scheme, or transaction. The Howie test is important for situating blockchain and digital currency projects with investors, okay, and project backers. Interesting that they literally used our company name in this concept. Wow, crazy. Crazy how in 2017, when we came up with this, that was the name we chose for our business. So certain cryptocurrencies and initial coin offerings, ICOs, may be found to meet the definition of an investment contract under the test, meaning many of the current cryptocurrencies that are out there will in fact be deemed securities now or in the near term. So let's talk a little bit about how that, and so what is Backers? Backers facilitates the issuance of regulated cryptocurrencies, regulated securities, issuing their shares in the form of a cryptocurrency. That is the Backers platform. That is what Backers was done and created for. That is where we got the idea to launch Backers in 2017, 2018. We saw the need for private companies to raise capital through the use of the public markets without having to go public, and the ability to use crypto technology to make all of that happen. That is where and how Backers came to be. So let's talk a little bit about the Howie test here. So talked about some of these ICOs are going to become or deemed securities. So the Howie test determines what qualifies as an investment contract and would be therefore subject to U.S. or Canadian securities laws. An investment contract exists. We talked about if an investment in money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others. It's important in situating blockchain and digital currency projects with investors and project backers, right? So project backers, people that are investing in a project. Certain cryptocurrencies and ICOs may be found to meet the definition of an investment contract under the Howie test. Okay, so let's understand what the Howie test is so we can understand what is a security currently. That this might change slightly. As I said, the SEC XRP sort of trial is on right now. This might change a little bit, but as of right now, January 4th, 2022, the Howie test is essentially a baseline for how how we can define whether something is or isn't a security. Okay, so understanding the Howie test. The Howie test refers to SEC W.J. Howie Co., which reached the Supreme Court in 1946. Howie Company sold tracts of citrus groves to buyers in Florida, who would then lease back the land to Howie. Company staff would tend to the groves and sell the fruit on behalf of the owners. Interesting. I've actually never read this, but both parties shared in the revenue. Most buyers had no experience in agriculture and were not required to tend to the land themselves. So essentially, they bought the land, they then leased it back to the company, and the company managed it, and they shared in the profits. Howie had failed to register the transactions, and the U.S. Securities and Exchange Commission intervened. The court's final ruling determined the leaseback arrangements qualified as investment contracts. So let's talk about the four aspects that determine whether an investment or whether something is an investment contract. So in doing so, the Supreme Court established the four criteria to determine whether an investment contract exists. Okay, so the first one is pretty simple: an investment of money. Okay, obviously. The second one is in a common enterprise. Okay, so the third one with the expectation of profit, and then the fourth one to be derived from the efforts of others. Okay, this is when we talk about NFTs. I think one of the biggest things that NFTs so far have been able to avoid is number 4. Okay, so essentially the reason an NFT currently is not deemed to be a security is because it's deemed to be a collectible, and the efforts of others are not directly related to the growth or the value of that. It in and of itself is its value. So it's not somebody else's efforts that are increasing its value. Now, you could say if an artist paints a picture and that artist continues to grow their fame and that painting obviously then grows in value, then yes, that indirectly that artist is in fact the value is being derived from the efforts of others, but it's indirectly. So let's talk about this. In the case of the Howie, in the case of Howie, the buyers of Florida Citrus Grove saw the transactions as valuable primarily because the labor and expertise were provided by others. Buyers only needed to invest capital, so money, to access an income stream. This classified the transaction as an investment contract under what is now known as the Howie Test, and therefore it needed to be registered with the SEC. Okay, now let's talk about Howie Test and cryptocurrencies. So on the backers platform. So digital currencies such as Bitcoin are notoriously difficult to categorize. They are decentralized and as such elude regulation in many ways. Nonetheless, the SEC has taken an interest in digital assets and has sought to clarify when their sale meets the definition of an investment contract. Okay, so according to the SEC, now here in Canada, the OSC is similar to the SEC. While they're not all the same, there are many different variables. The general principle or concepts still hold true. Okay, so according to the SEC, the investment of money test is easily satisfied with the sale of digital assets because fiat money, or essentially Canadian dollars, US dollars, or other digital assets are being exchanged. Likewise, the common enterprise test is also easily met, right? So is there a common enterprise, right? So in most cases, whether a digital asset qualifies as an investment contract largely turns on whether there is an expectation of profit to be derived from the efforts of others. This is what I was talking about, expectation of profit to be derived from the efforts of others. Okay, so for example, the purchasers of a digital asset may be relying on the efforts of others if they depend on the project's backers to develop and maintain the digital network, especially in the early stages, rather than these tasks being performed by a dispersed community of unaffiliated users. Okay, the test is also met. Okay, for example, the purchasers of a digital asset may be relying on the efforts of others if they depend on the project's backers to develop and maintain the digital network. Okay, rather than these tasks being performed by a dispersed community of unaffiliated users. The test is also met if the project's backers take steps to support the price of the digital asset, such as by creating scarcity through token burning. Another way the efforts of others test is met is if the project's backers continue to act in a managerial role. Okay, so these are but a handful of examples outlined by the SEC. If the success of a project depends on the ongoing participation of its backers, the purchaser of the associated digital asset is likely relying on the efforts of others. So they're kind of conflating a little bit the definition of a backer. I would argue that their definition here of a backer is actually that more of the initial business operator, and the backer is everyone who purchases the coin. But who am I to argue with the SEC, right? So there's some special considerations. Howie Test FAQs. How do you determine if something is a security? Why is Bitcoin not a security? How does the SEC define a security? Sorry, I'm going to put this in the comments as a link so you guys can see what it is we're talking about here. But that's basically it. That's the Howie Test. So we're looking at, what is a security? How are securities defined? The Howie Test then defines the rules that actually lay out what a security is. In the case of crypto, I would say a large majority of cryptos are actually securities. Hate to break it to you, the SEC is going to come down on them, and many of them that were listed and sold here in Canada and the US will be facing penalties, fines, or some sort of repercussion for selling a security, a regulated security in an unregulated fashion. So that's kind of where we're at. So we're talking a little bit about security. So the final thing I want to talk to you a little bit about here is when we look at securities, right? The next thing is we look at what is a security token. So securities are, as we said, regulated entities, regulated investment contracts, right, that represent ownership in a business. And if something is a security, it has to be sold through a regulated manner or issued through a regulated platform. That's where backers comes into. And then we can talk a little bit about the benefits of security tokens. So basically, security tokens or crypto stocks or crypto tokens denominate fractional ownership of a real asset in security tokens is an idea that is naturally more structured and means investors can expect that their ownership stake is preserved on the blockchain ledger, right? So now we're using the immutable, transferable, transparent, aspects of the blockchain to facilitate these transactions. Security tokens are a natural bridge between the traditional finance sector and blockchain and benefit both equally. This is because the assets divvied up via tokens already exist in the traditional market. Even the biggest markets like equities, either public or private equity, and real estate. Many blockchain projects now have platforms that directly undercut the old ICO model by tokenizing equity rights for pre-IPO companies. These are private companies before they go public. I would argue private is the new public, and there actually is no reason to go public, but we don't need to get into that right now. But a lack of regulation for utility tokens has meant that companies raising capital can circumvent institutional finance alongside the costs of accountability involved. However, given the perpetually volatile cryptocurrency market and its precipitous 2018 slide followed by its bull rally through 2020, it has become riskier to launch an ICO and expect conditions stable enough to run a company. So the old ICO model is gone. The ICO model is gone. Here is the STO model, or what we call the IBO model, initial backers offering model. So many projects have taken to cashing out immediately and remain solvent. This sinks the already weak argument that ICO participants are investors in young companies and opens the door to the new ideas. All right, so the new idea of a security token that represents the actual ownership in a business. I need to say this over and over and over and over and over and over and over. People say I like to hear myself talk. No, I don't think people really understand. Only 3% of the entire population of the globe is invested in cryptocurrencies. Of that, probably 25% are actually involved in the markets and understand what's going. There are very few people who understand the tokenization of securities is literally going to be 100% across the board. Every single security, debt, equity, hybrid, whatever variable, whatever flavor of security you want to look at, every single security globally will be tokenized. Every asset in the world will be tokenized on a blockchain in the next 3 to 5, potentially 10 years. Everything. And what we're saying right now with the Backers platform is that you, as an entrepreneur, as an owner of a business, you can now tokenize the ownership in your business. And then if you so choose, you can now sell those tokens to investors or backers on the backers platform to raise capital for your business. You can mint your very own cryptocurrency in the form of a security token that represents the equity in your business. And through the use of an initial backers offering or IBO, you can sell those tokens to the public and raise capital for your business. Those tokens are now held by those investors or those backers, your customers, clients, users, fans, and those tokens can now be traded on a secondary market to allow for liquidity in the private equity space. Securities, fungible tokens, security tokens through an IBO, initial backers offering. That is what backers is. That is crypto explained. This is an episode of Securities. Those who are following along, thanks for following along. Really appreciate it. Those who are not, all the best. I will hope you follow along soon. Be sure to like, subscribe, share, tell everyone. This is literally going to change the way businesses are run. This is going to change the way businesses are owned. This is going to open up so many doors. Open up the safe, bitches got a lot to say. This is going to open up so many opportunities for so many people. It's unreal. So we talk about investing in opportunity. Be sure to check it out, backers.ca. I will talk to you guys again tomorrow. Tomorrow, I think we're going to talk a little bit about the actual ICO process and how people went about back in 2017, 2018, raising capital for businesses, essentially illegally, doing so, and how they're going to be now probably reined in a little bit, and how you can now use that same model, though, legally, and actually raise capital for your business on the backers platform. Everyone else, I will see you guys again tomorrow. Have a great day.